Ladies and gentlemen, welcome to BSV TV. I'm your host Satoshi, and on this show we'll be defending the one and only, truly genuine Bitcoin. The Bitcoin that Satoshi Nakamoto designed in his white paper as a peer-to-peer electronic cash system for the world. Let's get the disclaimers out of the way. So all the statements that you hear on this show are opinion and must only ever be taken as opinion. They are never to be taken as any form of advice, family, financial, sexual or otherwise. And on that note, let's sit back, relax, have some fun and enjoy the show. Get paid for your content in Bitcoin and set your own fee on Streamanity.
Yeah, I'm not surprised I wasn't asked why I'm convinced Craig is Satoshi. I posted on Reddit. He signed in my presence using the private key from block number one, the very first mined Bitcoin block, on a computer that I'm convinced had not been tampered with, on software I'm convinced that had not been tampered with, a message of my choosing.
At Enchain, we've just funded a number of universities doing, so far, a test up to 1 gigabyte because it validates what we've already done independently. We've tested up to 380 gigabyte blocks. We've tested 1 million transactions a second and transaction sizes up to 20 megabytes. Super complex scripts, basically ones that can run operating systems. That's all of global commerce times about 50. On top of that, we can have complex scripts. On top of that, we can scale each of those transactions 1,000 times, which effectively means about 1 billion transactions per second, which means we can then have all derivatives, all complex trades. That means high frequency trading. It means everything that happens globally.
Is the market that effectively BSV is going for, is that global e-commerce, which is currently valued at $29 trillion?
No, that's too small.
Buy and sell Bitcoin instantly at bsvgravity.com. And you can now book and pay for your winter holiday at skibsv.com. Alrighty people, it looks like we are live, almost bang on, just after 5. Spot on, loving that. Welcome to Satoshi TV, aka Bitcoin SV TV, aka It's Just Bitcoin. Here we go. So the reason we broadcast on Twitch is because YouTube still won't allow it to broadcast live on my channel, despite repeated requests. Because first of all, they were deleting deleting my channels, and they were deleting episodes, and they were preventing me from editing my shows. And I thought, you know what, enough's enough. So now we broadcast live on Twitch, upload the edited version to YouTube, and upload the full episode up onto Streamanity, where you can set your own fee according to how you judge the quality. So let's get into a few of these articles. I love this goss, keeping up to date with everything. Check it out. Let's read this one first of all, from Amy Castor. Check it out. Loving all this goss on Binance. Binance, a crypto exchange running out of places to hide. See, even she knows. Everybody knows. Yes, they do. Right, let's see what this says then. So, Binance, the world's largest dark crypto slush fund, scathing, is struggling to find corners of the world that will tolerate its lax anti-money laundering policies and flagrant disregard for securities laws. On Thursday, the Cayman Islands Monetary Authority issued a statement that Binance, the Binance Group, and Binance Holdings Limited are not registered, licensed, regulated, or otherwise authorized to operate a crypto exchange in the Cayman Islands. Following recent press reports that have referred to Binance, the Binance Group, and Binance Holdings Limited as being a cryptocurrency company operating an exchange based in the Cayman Islands, the authority reiterates that Binance, the Binance Group, or Binance Holdings Limited are not subject to any regulatory oversight by the authority, the statement said. This is clearly CIMA reacting to everyone else blaming Binance on the Caymans, where it's been incorporated since 2018. On Friday, Thailand's Security and Exchange Commission filed a criminal complaint against Crypto Exchange for operating a digital asset business without a license within its borders. Last week, Binance opted to close up shop in Ontario rather than meet the fate of other cryptocurrency exchanges that have had actions filed against them for allegedly failing to comply with Ontario securities laws. Singapore's central bank, the Monetary Authority of Singapore, said Thursday that it would look into Binance Asia Service, PTE, the local unit of Binance Holdings, Bloomberg reported. The Binance subsidiary applied for a license to operate within in Singapore. While it awaits a review of its license application, Binance Asia Services has a grace period that allows it to continue to operate in the city-state. We are aware of the actions taken by other regulatory authority against Binance and will follow up as appropriate, the MAS said in a statement. On June 26th, the UK's Financial Conduct Authority issued a consumer warning that Binance's UK entity, Binance Markets Limited, was prohibited from doing business in the country. Due to the imposition of requirements by the FCA, Binance Markets Limited is not currently permitted to undertake any regulatory activities without the prior written consent of the FCA, the regulator said. It continued, no other entity in the Binance Group holdings any form of a UK authorization. So no other entity in the Binance Group holdings holds any form of UK authorization, registration or license to conduct regulated activity in the UK. Following the UK's financial watchdog crackdown, Binance customers were temporarily frozen out of Faster Payments, a major UK interbank payments platform. Withdrawals were reinstated a few days later. What? Why is that? Only a few days before Japan's Financial Services Agency issued a warning that Binance was operating in its country without a license. As I explained below, this is the second time the FSA has introduced such a warning. Last summer, Malaysia's Securities Commission also added Binance to its list of unauthorized entities, indicating Binance was operating without a license in the Malaysian market. A history of bouncing around. Ooh, let's get into this. Binance offers a wide range of services from crypto spot and derivatives trading to tokenized versions of corporate stocks. It also runs a major crypto exchange and has its own cryptocurrency, Binance Coin, currently the 5th largest crypto by market cap according to CoinMarketCap. The company was founded in Hong Kong in the summer of 2017. Jeepers, they've come a long way since then, but criminal entity, by CZ, more knowingly known as CZ. China banned Bitcoin exchanges a few months later, and ever since Binance has been bouncing about in search of a more tolerant jurisdiction to host its offices and servers. Its first stop after Hong Kong was Japan, but Japan was quick to put up the "You're Not Welcome" sign here. The country's financial services agency sent Binance its first warning in March 2018. The exchange has irked the FSA by failing to verify the identification of Japanese investors at the time accounts are opened. The Japanese officials suspect Binance does not have effective measures to prevent money laundering. The exchange handles a number of virtual currencies that are traded anonymously. Oof. Binance Binance responded by moving its corporate registration to the Cayman Islands and opening a branch office in Malta, the FT reported in March 2018. In February 2020, however, Maltese authorities announced Binance was not licensed to do business in the island country. Oh dear, oh dear, it's not looking good for them, is it? Following a report in a section of the media referring to Binance as a Malta-based cryptocurrency company, the Malta Financial Services Authority reiterates that Binance is not authorized by the MFSA to operate in the cryptocurrency sphere and is therefore not subject to regulatory oversight by the MFSA. The decentralized excuse, CZ lives in Singapore but has continually refused to say where his company is headquartered, insisting over and over again that the Binance is decentralized. What a load of crap that is. What a load of crap. Can you believe it? The audacity. Binance is decentralized. That's hilarious. That goes to show utter ignorance for the what decentralized truly means. This is absolute nonsense, of course. Yeah, it's like a multinational company. Distributed, not decentralized. The company is run by real people and its software runs on real servers. The problem is CZ, whose net worth Forbes estimated to be around $2 billion in 2018, doesn't want to abide by real laws. As a result, his company faces a slew of other problems. Binance is currently under investigation by the US Department of Justice and the Internal Revenue Service, Bloomberg reported in May. It's also being probed by the Commodities Future Trading Commission over whether it's allowed US residents to place wagers on the exchange, according to another Bloomberg report. Also in May, Germany's financial regulator BaFin warned the Binance risked being fined or offered its securities tracking tokens without publishing an investor prospectus. Binance offers stock tokens representing MicroStrategy, Microsoft, Apple, Tesla, and Coinbase Global. Binance has for 5 years done whatever it pleases, all the while using the excuse of decentralized to ignore laws and regulations. Regulators are finally putting their collective foot down. Enough is enough. Ooh, you know, how he can't see what's coming is absolutely insane. But I would not touch Binance with a barge pole. No, sirree. Shout out to Aneezy in the chat box. Thank you for joining me. CZ is going to be in some serious trouble soon, I'm telling you. I'm telling ya. Jeepers. Let's see what else we got here. Cointelegraph. This one looked quite juicy. Goodness. This is reporting on the Bitcoin white paper debacle, or the copyright case. Bitcoin.org blocks access to Bitcoin software download in the UK. Apart from removing the white paper, Cobra has removed access to Bitcoin software for site visitors from the United Kingdom. So he's also removed software. Good. It is no longer possible to download the Bitcoin Core software from Bitcoin.org if you visit the website with a United Kingdom Internet Protocol address. A notice on the website reads, "This software is presently not available for download in the UK, and download links will not work if you are located within the United Kingdom." Indeed, attempting to process the downloading the Coolcoin software from the site using a UK IP address returns a 404 error. Detailing the reason for blocking access to the software download for UK site visitors, Bitcoin.org's pseudonymous owner Cobra responded to a tweet stating, quote here, "The white paper is in the blockchain and can be retrieved through the software. I'm not allowed to distribute the white paper on Bitcoin.org or in any other way. We have to follow the law." Is that right? Huh. So what's this? Adam Backer said seems unnecessary. Following the law, really. As previously reported by Cointelegraph, a UK court ruled in favour of self-proclaimed Bitcoin creator Craig Wright in a copyright infringement case against Cobra and Bitcoin.org for hosting the Bitcoin white paper. However, the default judgment was only because Cobra elected to not to mount a defence. As part of the ruling, Cobra was also instructed to cover Wright's legal fees to the tune of £35,000, approximately $48,600. The judgment is the latest slavo in Wright's assault on people who dispute his claim of being Bitcoin creator Satoshi Nakamoto. In January, Wright demanded that Bitcoin.org, Bitcoin.com and BitcoinCore.org remove copies of the Bitcoin white paper from their respective websites. Wright continues to maintain that Bitcoin white paper is his intellectual property. Meanwhile, he continues to be a proponent of Bitcoin, the genuine Bitcoin, which is BSV, which is the original protocol, which makes it the real Bitcoin, the true Bitcoin, the genuine Bitcoin. The Bitcoin software download is still available from BitcoinCore.org. No, that's not Bitcoin download. That's Coolcoin download. Even for visitors with UK IP addresses at the time of writing. Indeed, geofencing the download link on Bitcoin.org is not likely to impact people interested in running Coolcoin in the country, given the multitude of walkarounds like virtual private networks and other websites that host the software. Interesting. Watch this space, ladies and gentlemen. Never a dull moment in crypto. No, sirree. Alright, I wanted to have a look at this one about hash rate, a CoinGeek. Plummeting hash rate, the good and the bad news. Alright, our man Patrick Thompson, here we go. 7 hours ago. China's ban on block reward mining is taking its toll on the digital currency markets. Over 50% of the hash rate that supports digital currency networks comes from China, and the abrupt government crackdown on mining has caused hash rate to leave digital currency networks in exodus. Look at that. Look at that. Yeah. Although the drop in hash rate will have a negative consequence on the digital currency markets in the short term, well, through speculators, there are a few positive externalities that will come out of this event. In this article, we provide a brief summary of the mining ban taking place in China, and then we will take a look at the negative and positive outcomes created by the ban. What happened in China? On May 21st, 2021, the Chinese government released a statement saying one of its goals was to prevent and control financial risks. The statement goes on to say one way of accomplishing this goal is to crack down on Bitcoin mining and trading behavior. Afterward, several provinces in China began issuing their own statements, informing digital currency miners operating in their jurisdictions that they had a specified amount of time to shut down their mining operation, and telling electricity providers in the area to terminate service with those digital currency miners within that time frame as well. Harsh. The result has been miners leaving China, shutting down their mining operations and shipping their mining equipment to new locations that will host their equipment. The bad. China's crackdown caused digital currency miners in China to abruptly shut off their machines and look for a new home for their mining hardware. As a result, the hash rate has dropped off nearly every digital currency network en masse. From May 21st to June 31st, the hash rate on the BTC network has declined by 41.5842%. The hash rate on Bcrash network has declined by 27.9%, and the hash rate on the genuine Bitcoin network declined by 12.3%. The negative news had a ripple effect across digital currency markets, sending prices plummeting. Hash rate tends to follow price, well, only through speculators, and China's ban on digital currency mining and crackdown on banks amplified the decline in both. Miners scrambled to relocate, and many people believed miners would relocate to North America due to its regulatory security. But the reality is North America does not have the infrastructure in place to host all of the mining machines leaving China. It will most likely take between 9 to 18 months for the mining facilities in North America to scale up. Now you might be wondering, why is this bad? Because the interim solution for many miners is to relocate to Kazakhstan, where a majority of the country's energy production comes from coal, a fossil fuel that has negative effects on the environment, considering the environmental issues that many people, including Elon Musk, have raised against mining. Relocating to a country that uses fossil fuels to mine digital currency adds insult to injury. Ooh. The good news, for large digital currency miners such as Tau, the decrease in hash rate has been good for their business. For miners with the majority of their hash power already located in lawful jurisdictions with regulatory certainty, they can continue to mine blocks, processing transactions, while other miners are forced to go offline and relocate. With less competition, big miners can win more blocks and process more transactions themselves, meaning they should be raking in more block rewards and transaction fees compared to their nominal historical average. The mining ban in China, as well as the environmental issues surrounding the energy efficiency of many digital currencies, is going to force the digital currency industry to improve. The miners leaving China are looking to relocate to areas with more political and regulatory certainty. The energy issues raised around the energy inefficiency of BTC mining will drive the mining industry as a whole to find greener solutions, such as mining with solar energy and other forms of clean energy, which is exactly what Tau have done. What to watch? In the coming weeks and months, you'll want to keep an eye on China's Bitcoin mining ban, where miners are relocating, and how energy is produced in the areas where they're relocating to. We're going to see a drop in hash rate as miners continue to shut off the machines they host in China and package them up and ship them to their new homes. We're likely to see the green energy argument come back if the locations where miners are sending their equipment do not use green or clean energy. China's ban on Bitcoin mining and mining rushing to find a new home has shaken up the digital currency market. Contrary to the popular belief, miners are the most important player in the digital currency networks, and anything that happens in that sector of the industry will inadvertently have effects on all other areas of the industry, so be on the lookout. Alright, yes indeed, be on the lookout. Loving that, loving that. And let's see what we've got here. Let's see what Cointelegraph are reporting on this one. An even bigger dip, an even bigger mining difficulty drop. 5 things to watch in Bitcoin this week. So Coolcoin may be fresh from its biggest difficulty plunge ever, but estimates warn that the TAT, I suppose is maybe that, the next may eclipse even that as miners continue to struggle. Yeah. Coolcoin starts a new week in familiar territory after a weekend of solid gains ending in a drawdown. What's in store? With another rally near $36,000 under its belt, the largest cryptocurrency is showing signs of strength but holds resistance levels remaining in place. The conditions are complex. The ongoing miner migration and associated price action have alarmed many, and Coolcoin's most accurate forecasting tools are seeing a real test. With fundamentals finally showing signs of life, however, bulls may have finally something to celebrate. Cointelegraph considers 5 factors at play when it comes to BTC USD this week. Stock records and an oil feud. It's another eerie, roaring 20s style mood on major markets this week, thanks to the S&P 500 seeing new all-time highs for 7 straight days. Encouraging economic data from the United States puts the Federal Reserve keeping plus the Federal Reserve keeping interventions has pushed the equities index even higher in recent weeks. Markets are priced for the continuation of a scenario that could not be better constructed. Chris Ligo, Chief Investment Officer for Core Investments, a Netherlands-based AXA Investments manager, summarized in a note quoted by Bloomberg. An interesting twist is oil, now at the center of another OPEC production row, which is itself gaining but sparking concerns about how much fuel will be available in August. With the US dollar steady, it seems that the equities narrative is the likely driver going forward. This scenario traditionally helping the Coolcoin action. No, it's such a load of crap. They have absolutely no idea. They're just talking absolute crap. Literally talking absolute crap. Like talking out of their arse. I can't be bothered to read the rest of that. It's just absolute, totally naff, absolute poppycock, whatever you want to call it. No understanding of Bitcoin in those articles whatsoever. So what's this? Huobi imposes 24-hour crypto withdrawal delay to dampen speculation. Let's have a look at this then. The exchange's decision aligns squarely with Beijing's ongoing multi-pronged crackdown on the country's cryptocurrency investors in an attempt to prevent both capital outflows and volatility in the crypto sector. Huobi Global, currently the world's second largest crypto exchange by daily trade volume, has introduced a 24-hour token withdrawal delay for all over-the-counter trades. The decision strikes a blow to all Huobi users, who for some will moreover be prevented from withdrawing their tokens for as long as 36 hours if the exchange's asset system judges them to be at a particular high risk. Huobi has said the move forms part of its attempt to gradually introduce a number of risk control strategies encompassing a large section of users. It adds that it expects the delay to effectively avoid user losses caused by the inflow of risky funds and protect the safety of user assets. It's just intervention. I can't see how that's going to help at all. Notably, Huobi had been implementing a narrower version of this measure since August last year, when it first imposed a token withdrawal delay of up to 36 hours on specific high-risk users. Maybe it's like to do with AML, something like that. The new, more comprehensive initiative seems to align squarely with Beijing's ongoing and multi-pronged crackdown on the country's cryptocurrency investors, which have recently targeted the mining sector, banking services, and crypto online footprint. In response to these restrictions, a large volume of crypto trading in the country has shifted to the over-the-counter market, which is relatively unregulated and ensures that the transfer of fiat currency does not take place directly on exchanges, exchanges trading desks. High levels of activity on over-the-counter market during regulatory clampdowns are an established pattern in China. Back in 2017, when Beijing first took action against crypto exchanges, investors have similarly adapted by making the shift to OTC trades. Huobi itself first rolled out its over-the-counter service in November 2017 amid a series of even tighter restrictions on crypto trading in the country. It's just bollocks. Today's news goes against some analysts' predictions who had expected Beijing to take a lighter touch approach on over-the-counter trading, given that the sector is judged to pose a lower capital flight risk than regular exchanges. Yet the South China Morning Post today reported that the over-the-counter sector is perceived by the authorities to be a gateway for both capital outflows and money laundering, as well as a spur to high volatility in the crypto markets. Late last month, Huobi updated its user agreement document banning crypto derivatives trading for all existing customers in China and a host of other jurisdictions. Earlier in June, the platform had already intervened to prevent new users from trading derivatives in parallel to reducing the allowable trading leverage from 125x to less than 5x. Good grief. That's so scammy. That's really scammy. Let's see what there is on CoinDesk. Coinbase to woo India recruits. Whatever. Bitcoin holds support. Who cares? Japan's central bank digital currency to get a clearer picture. Who cares? Ransomware group Revel strikes again. Demands 70 million in Bitcoin from 200 US firms. I think I've seen that one on Decrypt, so we might have a look at it over there. Investors cashing out of Grayscale Bitcoin Trust might bring market boost. Who cares? Yeah. None of these are particularly exciting. What's this? USDC on Tron blockchain. Good grief. On Tron blockchain surpasses $100 million in 2 days after public unveiling. Good grief. The growth could be the result of traders looking for faster and cheaper transactions compared with Ethereum. Again, they're just trying all the shitcoins. That's all they're doing. The circulating supply of USD coin, USDC, on the Tron blockchain has surpassed $180 million in less than a month, according to blockchain data. This could be another sign that crypto traders are increasingly turning to blockchains that provide cheaper transaction fees with faster speeds than what's found on Ethereum. Yeah, no shit, Sherlock. As shitcoin is only just realizing that. The achievement came just a day after Circle, the crypto-native financial service firm behind the dollar-pegged stablecoin, said it added support for USDC on Tron. One of the latest stated goals of doing so is enabling USDC growth in Asia and around the globe, according to Circle's website. Blockchain data shows that the first transfer of USDC on Tron was on June the 11th. A stablecoin USDC is pegged 1-to-1 to the US dollar, with each token redeemable for an equal number of greenbacks. It's still illegal. It's still illegal. It's judged to be a security. It's insane. Crypto influencer Justin Sun's Tron's blockchain has already gained traction from the rapid growth of the large stablecoin by asset cap Tether USDT on the network. As CoinDesk reported, there are more Tether on Tron than on Ethereum. Wow. The blockchain of Ether has, as traders, favor blockchains that provide faster and cheaper transactions. Surprise, surprise. While Tether is the most traded crypto asset, there's been a fast growing adoption of USDC on decentralized finance, which is the DeFi, according to data on CoinGecko. Meanwhile, data from Glassnode indicates nearly half of all USDC supply is currently used in smart contracts. Dear oh dear. Dear oh dear. The big difference from how USDC is used on Ethereum is that on Tron it's mostly used for inter-exchange transfers, said Ryan Watkins, research analyst at Mazari. He noted that nearly all of the USDC supply on Tron is concentrated on the top 10 addresses. That can't be good. So, Tethers and now USDC's growth on Tron could be an indicator that a lot of exchanges just move stablecoins over to Tron instead of Ethereum to avoid fees, Watkins said. Tron's son told CoinDesk in a WeChat message that the USDC supply concentrated on the top addresses serves as a reserve for exchanges that will trade USDC on Ethereum for those on Tron soon. We will burn those ERC20 USDCs or USDC that are sent to the Tron blockchain, Sun said, who pointed out that crypto exchange Poloniex already started supporting USDC on Tron. By press time, Circle did not immediately respond to a request for comment about USDC's development on Tron. The article will be updated when a response is received. Again, just watch this space, ladies and gentlemen. Just watch this space and watch it crash and burn. Right, decrypt here. So what's this? America's first legal DAO approved in Wyoming. Surprise, surprise. It's Caitlin Long and Cardano and all that, donating loads of money to the local university and all that stuff. Anyway, dear. Let's see what this is. So what the Reveal ransomware attack means for Coolcoin. The Reveal gang has demanded $70 million in Coolcoin after attacking at least 200 US companies on Friday. Oh. So on Friday last week, Russian-speaking cybercrime syndicate Reveal hit at least 200 US companies with a ransomware attack. The gang has since demanded $70 million worth of Coolcoin in exchange for restoring companies' data. Oh dear. The attack is the latest in a long line of ransomware attacks that have demanded payment in cryptocurrencies, notably Coolcoin. Reveal's ransomware attack. The Reveal gang broke into information technology firm Casia. The hackers then used the Miami-based firm to access and paralyze hundreds of firms. More than 1 million systems were infected. If anyone wants to negotiate about universal decryptor, our price is $70 million in Bitcoin, the group said. Oof. Dear oh dear. Dear oh dear. Can't imagine that they get much, really. President Biden discussed the hack on Saturday and did not expressly rule out the role of Russian hackers. Under his administration, the US Department for Justice is treating ransomware risks with the same priority as terrorism. Ransomware and crypto. The growing list of high-profile ransomware attacks that rely on crypto payouts has prompted call for the crypto industry to face tougher regulation. All of this is directly attributed to regulatory impotence over illicit cryptocurrency flows and offshore exchanges, said computer programmer Stephen Daly. Cryptocurrencies are also, by their very design, censorship resistant, dear oh dear, making them uniquely attractive to groups like Reveal, looking to make millions under the nose of law enforcement agencies. Crypto prices have also been prone to crash amid high-profile ransomware attacks. After the Colonial Pipeline hack, Coolcoin crashed 10%, and several altcoins also saw significant drops in value. But many in the crypto industry don't agree that crypto should be blamed for some of these high-profile ransomware attacks. Instead, the fact that the criminals are turning to crypto might make law enforcement jobs easier than it otherwise would be. Law enforcement would prefer criminals to use crypto. Charles Story, head of growth at Future, told Decrypt they could track where the funds went, identify what wallets came in contact with said funds, and if they have used a centralized exchange, they'll be able to identify the individuals. Again, there's no such thing as a clever criminal because they're all stupid. That's because the blockchain of cryptocurrencies like Coolcoin and Ethereum are public. Every transaction made on them is visible. They are also pseudo-anonymous rather than truly anonymous. Once a Bitcoin address has been linked with an individual, for example, if they cash out through a centralized exchange that's performed KYC, it's possible to trace the flow of money between wallet and identify the individuals using them. Oh dear, oh dear. Privacy coins pose a challenge for law enforcement. Well, not really, because privacy coins are all completely centralized, so just shut them down. Of course, it's not always so simple, and ransomware attacks are all too familiar with public ledger blockchains and traceable crypto transactions. Earlier this year, Colonial Pipeline hackers, who caused gasoline shortages all across the eastern United States, requested payment in untraceable cryptocurrency. The group has previously taken payment in Corecoin and Monero. So-called privacy coins, they're not their anonymous coins, such as Monero, Dash, and Zcash, use an array of cryptographic techniques to obfuscate details of transactions and other identifying information. That poses challenges for law enforcement. In Norway, Monero and Dash are at the heart of an ongoing missing persons case, while the United States Internal Revenue Service, the IRS, has invited people and then later 2 firms to try and break Monero's private network last year. Currently, there are limited investigative resources for tracing transactions involving privacy currency coins, such as Monero or other off-chain transactions that provide privacy to illicit actors, the IRS said at the time. Again, but the IRS knows that all these coins are absolutely worthless anyway, so they're just really worried about Ponzi schemes and people dumping their shit on newbies. Really, yeah, that's kind of what they're getting at there. But, let's see what else there is. On that one. Decrypt. Coinbase luring hundreds of Indian engineers with a $1,000 crypto bonus. Barclays blocks Binance payments to keep your money safe. Oof, dear, oh dear. What the Revel ransomware means for Bitcoin. Yeah, just on that. US regulatory crackdown could pop bubble like crypto markets. Kazakhstan introduces international taxes for crypto miners. Been over that. And America's first legal DAO approved in Wyoming. Surprise, surprise. Wyoming being an absolute shitcoin state. Dear, oh dear. What's this? So, former employee of Cryptopia, good grief, pleaded guilty of stealing $170,000 worth of crypto. Also, Dogecoin, Doge Killer, and Shiba Inu, the top trending coins in the US last week. Oh my god. Bitcoin whales added 60,000 BTC a day, starting historically provably July, or profitable July. Oh dear, oh dear. America's first recognised DAO. Who cares? Fed Chairman Jerome Powell met with leaders of a Coinbase digital dollar project. Surprise, surprise. The devaluation, Bitcoin failed as good currency. Yeah, we know that already. Europe needs to regulate crypto as quickly as possible, says Banque de France governor. Fair enough. Institutional demand persists. The proposed Bitcoin ETF now holds 22,500 BTC. Core coin mining difficulty drops 28%. Biggest negative adjustment in history. Let's have a quick look at that then. So Core coin's mining difficulty went through its biggest drop in history with a 28% decrease. Fresh data from Glassnode revealed today that Core coin's mining difficulty dropped by 28%, making it the largest negative adjustment in the history of the cryptocurrency. So that's what price has done, I think. What is a Bitcoin mining difficulty adjustment? For clarity, Core coin mining difficulty is a metric that describes how hard it is for miners to mine a new block on the network. When the difficulty increases, it becomes harder and miners will need to dedicate more computational power to find the next block, hashed, and vice versa. As computational devices increase, the hash rate also increases, which in turn makes the network more secure and robust. Not really. It's just more hash rate, that's all it is. You can still centralize the network and crash its fundamental value to zero. But just like the price, a Core coin's mining difficulty also fluctuates, and it's automatically adjusted after every 2016 blocks are mined, which takes about 2 weeks, since the average time for mining each block is about 10 minutes. This in turn is a reference to a Bitcoin mining difficulty adjustment. Generally, as more hash power enters or leaves the network, the difficulty fluctuates. China's ban on crypto mining. Over the years, the hashing power on the Bitcoin Core coin network has steadily increased, with up to 65% of it coming from miners based in China. This has led to many controversies in the past, as some argue that a Core coin network is centralized, since the majority of its miners are concentrated in one region. Again, that's got nothing to do with centralization. That's been distributed, These people just have no clue what decentralization is or what Bitcoin really is. Fast forward to Q2 2021, China has become overly aggressive towards miners. The country has launched a full crackdown on mining operations and has made the region unbearable for miners. As a result, China continues to lose its hash rate dominance as miners are being forced to shut down their machines and migrate to other countries like the United States and Kazakhstan to conduct their operation. Ooh, let's see, what does it mean for Bitcoin miners? The negative adjustment was also followed by a decrease in the core coin's hash rate. At the time of writing, the total hash according to the blockchain is at approximately 1 year low of 87.6 mega terahashes. After dropping by a million terahashes. After dropping by more than 50% in less than 2 months in May, the hash rate hit an all-time high of around 120 million terahashes. Wow. In any case, a drop in the hash rate suggests that there's less competition for mining a block, and as new players start to capitalize on the opportunity, the hash rate is likely to start going up. Relatively interesting article there, I guess. And I think that was it. Former employee of Cryptopia pleads guilty of stealing $170 worth of crypto. The man who turned out to be an ex-worker of Cryptopia confessed to stealing about 250,000 New Zealand dollars worth of digital assets. And an ex-Cryptopia staffer admitted he stole nearly 250,000 New Zealand dollars, or around 170,000 US dollars. He pleaded guilty on 2 charges: theft by a person in special relationship and theft of more than $1,000 in New Zealand dollars. Alright, yeah, interested. I'm not really too bothered about that. Yeah, couldn't really not bothered about that. I don't think there was anything really worth looking at on BTC News, but yeah, that'll do. So I've just looked at the time, 41 minutes. Epic show, people. Quite enjoyed that today. So let's have this original article up of CZ while we're doing Ding a Dong. So my favourite time of the day, people. Neezy, you are first today, my friend. And anybody else put their handles and payments in the chat box. Let's do this. Here we go. NEE for Neezy. There we go. Swiping to send on the way to you. Hey, Orange Kicks in the house. There we go. Thank you very much. JPabs as well. Great stuff. ORA, Orange Kick. There we go. Got that one. Swiping to send. Volume on loud. Off we go. And JPaps as well. Excellent. Thank you very much for joining me. Hope you enjoyed the show. There we go. JPaps is in there. Swiping to send on the way. I'll give my voice a rest now. There we go. Alright, people. Hope you enjoyed the show. As ever, be aware. Take care. Stay safe out there. Joy given. See you guys soon. Get paid for posting your pics on Relica. Download the app now at www.getrelica.com. Get your tweet etched on Twitch, forever on the Bitcoin blockchain. Do it today at www.jointwitch.com. BuyBSV.live, the best place to buy Bitcoin SV online. Support independent content creators on micropayment platforms such as Streamanity, Twitch and Relica. We should profit from our data, not the large corporations who track, monitor and sell it. If you enjoy the Bitcoin content that I produce, please support me by heading over to www.satoshi.tv, where you can keep up to date with all the latest news, gossip and content as it's created. Thanks very much. To get started in Bitcoin, go to freebsv.com, where you can claim your free Bitcoin. Then head over to Twitter and follow @IamSatoshi, where you can take part in his very generous and world famous free giveaways. The future of advertising meets the power of Bitcoin at Tonic Pow. Get paid for posting advertising campaigns to your social media profiles. Go to www.tonicpowads.com.